Hello and welcome to this episode of Nothing Ventured with me, Arish Shah. Today in the studio I had with me David Fogel, and we talked about being trained to fail at the IDF. Can you do something good while still making a shit ton of money? Co-founder problems that exist in VC funds as well, and how the Me Too movement drove David to co-found Alma Angels. This is an excellent episode. I really recommend you listen to it. And hope you enjoy it. Hello and welcome to Nothing Ventured with me, Arish Shah. Today in the studio with me, I have David Fogel. David is an operator turned VC, turned operator again, currently a fractional COO and venture partner with Zinc. David was previously COO and CCO at WeFarm, where he scaled the team to 150 people. Founder of ADV, an evergreen fund investing in VC funds, as well as B2B, B2C, and deep tech ventures. In 2019, David co-founded Alma Angels, one of the most well-recognized angel groups with a focus on investing in and supporting ambitious female founders. David, welcome to the studio. Great to have you here with me today.
Thank you very much. Happy to be here.
Awesome. Let's dig right in because there's quite a lot to go through. For those that haven't listened to David's prime episode, I seriously recommend you do because there's a lot in there. We've had a few guests on the pod previously who are ex-IDF, Israeli Defense Force, right? And I'm always intrigued how that period of military service informed their move into tech and venture thereafter. What were the tools that the IDF gave you that have best served you in the startup scale-up world?
So it's kind of a tricky question because people that haven't gone through military tend to glorify it as if it's something. I think if you actually look at it, it's basically probably one of the biggest corporates ever in the world.
Yeah.
There's people that do just like their PAs, their cooks, there's people that clean. So it really depends. Like sometimes it teaches you how corporates work more than anything. Specifically in my case, I was in the Navy. And I was on a ship for almost 4 years, heading the defense systems of the ship. I think if I'm trying to think about the first principle of the challenges, and this is specifically for the Israeli military, which is basically a mandatory service. So it's not a professional service like in many other countries. So one of the challenges is almost 80 to 90% of the population that is eligible actually goes through it. So one of the things is that if you look at the fundamentals, how do you bring citizens in and actually get citizens out, not just like soldiers?
Yeah.
So a lot of the challenges of running the entire country into an organization like that, and we call it the melting pot, because it doesn't matter where you come, the military defines what you do based on how they assess your skills, is to deal with ambiguity, because you don't know anything until you start. Very few people, there are some voluntary things, but so dealing with ambiguity, uncertainty, and focus on getting the job done is basically a lot of things where you sometimes manage a team and lead a team, and there's a new person on the ship, and there's now he's working on this team.
So how do you orienteer them, and
how do you start by we still have the outcome of X, let's get the job done with whatever tools we have, and you don't have all the right tools for the job. That includes people, but even just literally tools. So a lot of the experience, which is within a structured environment, they throw you into the water very fast. Within 4 years, I went from basically 6 months course in the Naval Academy to managing 2 systems worth 50 to 60 million each, and a team of 3-4 people a year to 3 years younger than
and
me.
You'd have been
22 at the end of that.
Yeah,
started at close to 19. And you have officers, and I wasn't one, but you have officers that go to longer training to manage people. But that entire environment also teaches you, it's embedded if you think about military, in doing retros. A lot of exercise, and then why?
Postmortems, essentially.
Postmortems is embedded a lot in how the military or Navy operates in order to learn and improve. And that continuous cycle was we're not going to fuck you up for fuck-ups. we're gonna say, okay, what do we learn? How can we improve for the next drill? Is embedded in a lot of how people look at stuff. So again, not every person takes that, but for me, that really helped. And it was like, and I see that a lot now when I work with people who network in startups and move from like a corporate environment. One of the scariest thing for them is to start the first step. And it's like, how do I talk to a customer? Like, the product needs to be perfect before I can get out. And and that means you're just too late and not fast enough. And you're not focused on the outcome to move it there. And it's getting that, it's super, like the entire system around us in the corporate world or even the business world, basically holds you back from making mistakes.
Well, there's two things. I mean, like the podcast is called Nothing Ventured for precisely that reason, right? It's about taking that first step. And I think, to your point, when you come out of a corporate, there are two problems. One, you are always covered, right? Like in the sense that there is a team of 100 people, you can hide from your mistakes. Not that people necessarily hide from their mistakes, but the second problem is that you don't necessarily have enough oversight across the whole process to learn from where there have been failures, right? And exactly to your point, people don't have that ability to introspectively analyze what went wrong and learn from it and take that as a growth moment rather than a moment of shame. In corporates, you're always trying to move upwards, whereas I guess in startups, you at least initially are just trying to learn, right?
But here's the thing, which is like most of us, and it's not just corporate, it's like the entire business world is basically punishing your mistakes. So
school essentially is exactly that. Is the first.
So you're trained not to make mistakes versus to look at mistakes as learning opportunities. And you'll be surprised, but I, as a board member, interviewed people, as like operator, interviewed people in startups. People jump into a job in startups and are afraid to make mistakes. And you can see that a lot because a lot of people probably in interviews ask, okay, tell me about your failure, what time you failed. And 90% of the people, when I ask that question, give me a general example where the team failed or the company failed. And I stopped them. I was like, no, I wasn't asking about general. Like when you feel you personally failed, and you can literally see in that, like they flutter. Like, how do I address that? Like,
I'm going to come off badly if I actually say I failed.
So a lot of that becomes, okay, like if you're able to talk about failure and actually analyze that, that's a good signal for me as a person that hires. And that's in every job, like as a VC and as a startup, that you are able to do that, and I don't need to spend time teaching you how to do that. And it's once you're in, and even when you manage people, even when they are accustomed, quote unquote, accustomed to do it, it's really interesting to see because a lot of what you do as a manager, especially like most of my roles later on in life were managing people, is especially in startup, is letting them feel comfortable that you got their back, that they will fail. And I had this discussion with every direct person I manage, and literally in one way or another said the following, like, we need to move fast. We accept that moving fast makes, I need you to ask for forgiveness, not permission, which means you will make mistakes.
You're going to have to risk.
But you will make mistake. And if you don't do mistakes, we're not moving fast enough. That means I got your back. It's never your mistake. I'm the boss. Accountability is with me. And you literally see people shift by like feeling more relaxed to do that. And of course, it takes time to start going into it. But like that aspect of having that discussion, which is like, I own this, but you need to execute. And I get that. I want you to run, make mistakes. And every time I tell them, like, you're not making enough mistakes, people are like, what do you mean? I want you to make more. That means we're not learning fast enough. We're like moving fast enough. And that mind shift is a lot easier for people that are self-reflective and are able to do that.
No, for sure. And I can imagine how in the military, especially, that becomes essential because, you don't just do retrospectives when things go well. You also obviously, as you said, do them when things have gone badly. And arguably there's more learning from when things go badly, right?
Some of the best I've seen, and like even within the military, different people do it differently. The Air Force are probably one of the, because the speed has to be like phenomenal in terms of reaction. they are amazing at that. Everything is being retroed, investigated, and realigned on a daily basis. Every exercise. In the Navy, we move with ships, so it's a bit slower. But even then, like, it's done.
Yeah.
But split decisions are not as critical. Not to say they aren't.
Yeah. But you have a bit more time to explore, whereas I guess so if you're in the Air Force, you may have to make decisions literally kind of on a hair trigger. Moving past that, right? So I first remember hearing about WeFarm whilst I think I was on my way out of Papua New Guinea or had just left Papua New Guinea, and that concept to me of Kenyan smallholders chatting with South American farmers to improve their corn crops and their yields, it just made a hell of a lot of sense to me, because I remember even in Kenya, I would see, mismanaged plantations where they weren't rotating enough, and therefore, yields dropped, and ultimately they weren't able to farm at all because, they'd essentially lost all the nitrogen. There was no nitrogen fixing happening. And I was quite sad to hear about its closure last year. What were the challenges scaling a business that is so focused on like those types of emerging markets? And what do you think that WeFarm got right?
I think we need a couple of hours for that, and definitely more whiskey. But I think probably the best person to ask and have that story with is Kenny.
Sure.
Because he's been there from before it started. Like, I was an investor on the board for the first 5 years, an operator 2 years in. I think one of the most difficult things, especially and this is from an outside looking, when Kenny started, is that people didn't recognize the ability to be an impact business and a startup.
Yeah.
And
they were incompatible.
You're either doing something good, or you're making shit tons of money. And it was a lot of like time for people to understand the mechanics of the business. To say it doesn't matter, like the impact is embedded in the revenue engine. Is the more money we make, the bigger the impact. And I think it also like understanding that. I think the second part is, think about it. It started in 2015. Venture in Africa, like people that invest in Africa. Yeah. Not to mention a high-risk startup, there were almost none. None. Yeah. So a lot of that was finding investors and to back you while you're there, and they don't have any network or access there or insights. Most people, I think, never visited Africa as a whole, not to mention invested and put their money on the risk.
I literally spoke to someone yesterday whose entire business is around diligencing African ventures for VC funds sitting outside of Africa because they don't have boots on the ground. Yeah.
And if you look at it, like the really interesting aspect of it is you were there and you're like, yeah, of course, farmers do this. I know farmers. Like, people don't know farmers. Not to mention the challenges. And there's a lot of, and this is part of the insight that Kenny brought when he created WeFarm. There was a very paternalistic approach to say, oh, we know how to farm. Let us teach you small-scale farmers in Africa or Latin America or Asia how you should do it. And his insight was, they're actually super smart people. They're running, to run a farm is to run a business. And like they're like more experienced, less experienced. If we just provide a platform for them to help each other, like they already do, we just like embed the existing behavior and scale it. And people never met a farmer. Like, I was not even talking about in Africa, in UK, or like the amount of people that know farmers, and that the entire aspect of farmers helping each other, small scale farmers, was really difficult for people to wrap their hands around. I think if you look at the business itself, one of the biggest challenges is how the hell do you scale to millions of farmers in Africa? And that was 2015. Smartphones were there, but not in Africa. Smartphone penetration in Africa in 2015 was about 14%.
Yeah. So now everyone has like 4.
Now it's in Kenya, it's about 55%. But like, I think in Nigeria is about going on 30%, 25%. But again, Nigeria is almost 200 million people, so that's still huge. But it's moving up. And I think one of the biggest challenges was like, oh, we don't see the scale. The only companies that were able to get to millions of small-scale farmers in Africa as a whole were telcos.
Yep.
Which basically...
Which is where M-Pesa and all of these sort of things.
Yeah.
Yeah.
So I would say the core challenge is how do you keep an engaged small-scale farmer and then scale it in a recurrent manner and figuring out that scale. And it took, I would say, roughly 6 to 12 months to understand what is the mechanism to increasingly grow. But then within, I think, the first year, it was 32,000.
Mm-hmm.
The second year, there was more than doubled that, about 80,000. And then it's 1 million.
Mm-hmm. Wow.
And then it became, within a couple of years, 3.5 million. The only ones that are able, still today, to get to 3.5 million are like telcos.
Yeah.
So once we have that, the second challenge was how do you commercialize, and where within the value chain we step in. And I think we investigated a lot of ways. We found the right one, I think. I think one of our challenges is, like with many startups, is 2022 happened.
Yeah.
And
what? Just before you get to that, what was the commercial model then?
So the end commercial model that we was a marketplace.
Okay.
Where basically, and this is part of the realization, there were two things that happened in 2020. I put COVID aside. Within all of that, we realized that smartphone penetration has got to almost 50% in Kenya. So we need to choose if we're building an app or continue on SMS. And we decided to realize, well, all the farmers will be on smartphones, and at least half of them are. So let's build to where they are. So we switch platforms. We literally dropped the SMS.
The SMS, yeah.
We kept it running for the ones that won, but didn't put any effort in it. And moved all the resources in developing an app. And within that, basically, think about like any other marketplace. There's retailers that sell to farmers on a daily basis.
Yeah.
We came to those retailers and said, in your county, you have 2,000 people that buy from you per month. We have 10,000 people in your county alone. Put your store online, put all your stock.
And this was this what developed into We Farm Shop?
Yeah.
Yeah. Okay. Got it.
And basically, you put all your stuff online. We help you sell more, and we take a percentage out of it.
Yeah.
The idea after that, and we already started running, was now that we have, and there's a whole thing about loans to small-scale farmers. The problem is most loans in Africa are delivered based on acreage. Like, you have 2 acres, I can give you like 20,000 Kenyan shillings. Yeah. Why? Because you can probably produce this or that, and it's. But there's a huge aspect of gap of basically, you call it in our world, basically just running the day-to-day operations.
Yeah, the costs, yeah.
And once we have somebody that is buying online, we have basically access to a way to estimate disposable income.
Yeah.
So instead of having 30% default rate,
you essentially create credit scoring for.
Exactly. We become the credit scoring. We're already talking to banks, and basically based on if you've done the average spent per purchase, the first one, the average was 10, but people bought 4 times a month and ended up with about 32 on average.
Wow.
$32 per spend. Because again, running a business takes money.
Yeah.
And we just shifted all that money to us. And basically within that, take a fee, then become the debt provider and so on.
Yeah, so you essentially create a financial services app for smallholders.
But there was I would say 2 reinforcing network effects. The one about the knowledge in the community. People kept coming back because the knowledge, so like people always diversify in terms of what the crops. And somebody said, I want to start farming bees. I was like, this is what you need to do. ABC. This is how you start with it. This is 1, then 3, then 5. Somebody said, but how do you purify honey? This is one of the most memorable posts. I was like, and then somebody gave one step-by-step 14 bullet points. How do you purify honey? I remember we all looked at it and was like, this is amazing, because if you Google it, there's nothing on it. It's like, but this is super applicable for small-scale farmers, because we're talking about take these 2 type of like containers. They are basically plastic containers. Put 2 rocks in this. This is like super basic but super valuable. And people kept coming back for that. And then they were like, okay, so what type of pesticide do I need to buy? How do I do this? And that is a feedback loop directly into the shop.
Yeah.
where they buy more.
Yeah,
based
so
on
it's like, now I know how to purify honey. Where do I buy my bucket? Right,
Exactly.
go back to the shop, buy. Yeah.
So buy all the stuff there, and the shop itself is like, okay, you buy more, we can actually give you more credit.
Mm-hmm.
We can buy more and basically build your business bigger and better. I'm not even touching the second layer that we wanted to do is, now that I have all the data of what all the retailers in Kenya have, and it's online, and how they sell, we can help the same thing for them, which is basically provide debt for them and connect them to the marketplace for financing. But also we can help them buy better. So the entire thing was being the digital platform that connects all the players and make it more efficient and more equitable.
You go up and down the value chain, essentially, and
but again, that was
financial
we
services.
haven't touched on that, unfortunately, yet, because 2022 happened.
Yeah, well, sadly, I guess, because I mean, I think, you know, one of the we're going to have Igoso on in a couple of weeks, talk about Africa tech in general, but certainly Nigeria, Lagos, and so on. But the thing that I always am struck by is that tech that is serving populations in Africa is serving grassroots populations. These are people with real needs, and therefore the tech is often solving real problems. Like I always say, you know, whilst we're sitting here investing in 15-minute grocery delivery, like these guys are solving.
Now it's about 45.
Yeah, if you're lucky. If there's anyone standing, I'm not sure who's just been acquired, but I think someone else has just died a death as well, right? But you know, these are real problems, and I think it's really sad when propositions like this essentially close down, because you know they really were solving a direct need of an underserved market, right? Yeah,
definitely. Don't get me wrong. I think one of the challenges that, and people look at it a lot in terms of, we shouldn't, like VCs should invest in innovative solutions and change the world. And as a VC or ex-VC, I think there's a fallacy that people don't understand about what VCs are actually there for.
They're there to make money.
Not just there for other people. They manage other people's money. There's obligations to that. And not to invest in cool innovative solutions.
Innovation is like a happy product of investing in the right financial return. Yeah.
And what really matters to most VC, because the structure of the fund requires very fast returns, I mean, very big returns. So, like, if you actually look at business, I'll give you an example that you probably know of, but just to semi-anonymize it. A company we all know started year one with 50,000 revenue, $50,000, grew 100% year on year, and IPO'd with 150 million in revenue. It took it 18 years. Yeah. 18 years. Yeah. That's an amazing company. It's Nike. Yeah. Okay, if you read Shoe Dog, he talks about it, and he only raised debt, about 5 million, and that was 3 years in or 4 years in. Yeah. He was revenue making. He grew 100% year on year for 18 years straight.
Bootstrapped.
Yeah. Again, and he was, again, I'm not diminishing it, but he was like a white privileged young guy in Midwest US. He had everything working for him, but he almost went bankrupt. He said it, like almost every year, because of everything was debt financed. Like I almost died. And only in the 60s, only a white guy in the US can be able to continuously get out of
you could argue the same today, but anyway, that's that's another podcast altogether again as well. Yeah.
But the really interesting thing is that's not a VC business.
Yeah, exactly.
It's one of the best big companies in the world, but it took him 18 years to get, and most VCs want that within 7 to 8 years. Yeah. Not to mention gross margins on that. So a lot of, like, I would say 95% of the startups I meet are basically great companies that should never
raise VC. Yeah.
And I think that the challenge when people look in Africa is that most of the solutions there, because of the challenges and lack of infrastructure, I'm not talking even about just like roads, I'm talking about digital infrastructure. The ability to scale fast is not there, or wasn't there. Now it's coming about a lot more. And you need people who understand the local dynamics to be able to say, I'm willing to take the risk. And in the last 5 years, you see a lot of great funds coming about. starting like pre-seed and seed fund, but they come from people internally that understand where does the risk and how A differs from B. And all the external money comes in Series B.
Yeah.
It's like, okay, we solved that. We've proven that works.
Well, half the VC chats that I'm on that are Africa focused, like literally have people say, yeah, we're investing in Africa, but they need $1 million EBITDA post Series B. I'm like, okay, so you're not actually venture, you're private equity. And that funding gap at that pre-seed seed level is probably the biggest gap. And, you know, obviously here in the UK, we have things like SCIS and EIS that
the company
essentially helped that. But
the VC that led WeFarm's initial pre-seed, Local Globe.
Yeah.
Like there were only 2 funds that said yes to WeFarm's pre-seed, and both Sol and Robin are South African by origin. So like, but they can relate. They understand the mechanics of the markets. Almost, other than them, the only one at the time, who was it? I don't remember. But there was another one that gave but a lot less in terms of term sheet. But that understanding of mechanics for a market is very important for VC.
And it's essential. And I mean, we're going to move on to talking about VC in a second, but it's that concept of A, understanding what's happening on the ground, but B, also understanding that Africa is not homogenous, right? Like it's
54.
It's like a lot of countries, right? And what happens in Kenya is not what happens in South Africa, is not what happens in Nigeria, right? And I think that's also difficult for people to get their heads around. But moving on, right? So we've had a lot of emerging fund managers and VCs on the pod, but we've rarely had someone who left their own fund, right? So what excited you enough to co-fund ADV, and what was it that led you to ultimately walk away? And what is it about operating also that keeps bringing you back to those sort of roles?
So, wow. I think the vision we had behind ADV was democratizing access to capital. And I think we all bonded around that mission. And the end goal was basically to build a global marketplace where every startup founder can get access to capital and provide to huge LPs such as BlackRock, Legal & General, a platform where they can deploy into early stage. For them, early stage is everything under B, but they are not able to write the $1 million checks. However, the vision was they deploy $500 million per year through the platform, and we make 1,000 small investments. And when I say we, is the machine that we build within ADV. We went about different ways to do that. There's a lot of learnings what we failed. I think one of them is to try to do, like any good startup that failed, too many things at the same time versus one after the other. But we were operating as a fund while still experimenting. So there was a lot of not enough focus, I think, from our perspective. But I think the really thing that made me take a step back was my realizing with the partners is that we're not aligned to how to move forward and what we want to build in terms of a culture and approach. And then it's like, okay.
Which is massively kind of mirrors a lot of startup stories where it's essentially the co-founding team. When co-founding teams break up, often that is the death knell for the startup, right? Because
again, I think in VC, there's actually, this is something that happens a lot more and people are not aware, but like a lot of partners in different funds are moving and it's not as fixed as people assume. But it is very heartbreaking in a lot of things because you, like with building your own startup, you come together with a vision, and after several years, reality happens, and it's like you're not the best person for the job, or the shift moves, and most of them want to do A, and you want to do B. It's perfectly fine. To say it was easy, definitely not. Okay, but I think you learn and grow from that as well, being a self-reflection and like looking at that. I would still go through that journey because it was an amazing opportunity. Just to be clear, my first ever fund was 150 million pounds.
Yeah, it's pretty.
That is
pretty amazing.
Looking like knowing what I know today. Even then, I was like nobody.
So would you do it again?
Yes, I'll do other similar. I will put a couple of other things in place in terms of alignment with my co-founders, but like that, it's super difficult to say no to that unique opportunity.
Yeah, it's amazing.
And being like very honest, like there were good and bad things. There were some amazing. I think like we backed amazing founders, like and any from cyber and deep tech to WeFarm. Actually, WeFarm was the first check we wrote. That was the first investment ADV we wrote. But we also, anything from fintech to like companies that end up currently like e-learning and ed tech raised 40 million Series B, impacting people's life and changing stuff. So super happy with that journey and like with my contribution to it. I think that the last question is what brings you back to operator. It was really interesting because when we closed down WeFarm, I was actually working with a couple of friends and everybody was like, so what do you want to do? I was like, well, I don't know, either go back to VC and be another partner in a fund, like if I find the right people, or going back to be like a COO of a Series A, Series B. Like another founder. I want to back another founder that I believe in and with the mission and so on. And then, like, I realized two things. I got offered to join a fund, and I was like, shit, I don't want to do that. I realized I really enjoy the whole building, like, the culture, the operations, the mission that we built at WeFarm and how we did it was something that was very compelling. And I think the challenge, and this is like, VC is a very glorified position, and it's a very privileged position. But if you actually try to sum it down, we are consultants with money. It's very like...
I mean, a lot of my guests would try and argue against that.
Of course.
But that is essentially... You are an inch deep and a mile wide. You're never...
Exactly.
You're never... Yeah.
But even... Here's the thing. Like, if you actually look at the time you deploy... We all agree that it takes 10 years to build a company. As an investor, even if you're leading the round on an accumulative 10-year journey, if you're spending one full day per month with the CEO, not the company, you're basically advising, helping them think, and you're really good at this, that's per year, 12 days. Okay? That's 120 days over a 10-year lifetime.
Yeah, it's less than a third of a year, essentially. It's a third of a year.
Will you give anybody, for 120 days of work within 1 year, 20% of your business?
No.
Because it's all consultancy. We don't do the work. We help you think. And don't get me wrong, I'm not diminishing the value of being there with the network, with the right framework. It's definitely valuable. But at core, and this is one of my challenges with a lot of VCs, that, we made this startup. Nobody made that startup.
The founder made this.
The founder and most of the team that worked there did that. And I think coming from a very humble position, seeing all that, and it's like, and especially with WeFarm, it was like being on both sides of the same table. It's very humbling to understand that, like, I'm not diminishing the value of a great consultant with money, but you're not building the business. And I think that is super helpful. And I met more and more investors in the last, I would say, 4 or 5 years that understand that, come from a very humble position, and are actually able to impact more.
Yeah, and there is this whole thing that in the US you have a lot more founders turn VCs, where in the UK, Europe, at least historically, it's been more money managers, sort of people from a finance background.
Well, I think that is actually just a difference in age of ecosystem.
Yeah, exactly.
The VC world in the US started in 1948.
Yeah.
There's enough money there to make good enough
the
founders
and all these guys. Yeah.
But most of the founder operators, other than in the 90s, there were like 3 perhaps, and they came from Intel or like John Doerr type of thing.
Yeah.
Most of them started in 2005 with like Super Angels and Microfund that became now the biggest fund that we'll remember and look at as, oh my God, they're amazing. But that's basically 20 years ago.
So these are the Andreessens, the Sequoias, etc.
Yeah, all of them started in the last 20 years.
Yeah.
And if you take the fact that the entire UK ecosystem as venture, if I'm being very generous, is 20 years, let's see. Because Index started roughly 20 years ago.
Okay.
If you look, Sol and Robin Klein started actually angel investing in the 90s, but that's not an ecosystem.
Yeah.
The actual ecosystem started around when they, with Reshma, started Seed Camp, I would say 2007. but let's be a bit generous. Let's say 20 years. That's 60, 70 years compared to 20 years.
Yeah. And Europe, even less, right? And much later stage. Moving on from kind of the VC and the operating, in 2019, you co-founded Alma Angels with Deepali Nangia, whereby I think we're all pretty kind of familiar with the lack of funding by now to female founded teams, less than 1%. I think the stats I was reading again yesterday was 89% goes to all male teams, and 10% goes to mixed teams, and still only 1% to, or less than 1% to purely female founded teams. But beyond that obvious reason, right? What drove you to launch Alma, and where do you hope it will lead? And I also ask this because you are a middle-aged white guy, right? Like what was it that drove that thinking, and how did you get that?
We're 4 founders of Alma.
Got it.
It's Christine, Ella, Deepali, and myself.
Okay.
3 women and a man. I think we all have our own journey how we got to Alma. My personal one, I think going back to how we started, it's part of my own journey of self-reflection and realizing the privilege I came from. So trying how to like summarize it without going too much. On a really basic level, growing up in Israel I grew up in a very privileged position without knowing that I was. It's probably it's the only place in the world where a Jewish guy can be the majority.
Yeah, of course.
Without even understanding what anti-Semitism or experiencing anti-Semitism. I'm not like crying about it, but like my parents grew up in Romania. I heard the stories, but never actually experienced it, and it didn't impact my day to day. But I also am a man, and I'm white, so got a lot of that. Yes, we're immigrants. Yes, we started from Brazil because we moved from communist Romania. But within all of that, I still have that privilege, but never realized what it means. And then I left Israel. I was like, oh shit, I'm a Jewish immigrant in Spain. And I experienced anti-Semitism where people basically refused to rent me a flat because they realized I'm Jewish. And I had similar experiences in Germany and in the UK. And you start suddenly, like, I grew up in a very huge sense of what's right and wrong in the world. Like, it has to be fair. And I realized that a lot of that isn't there. Working with We Farm, going to Africa, getting exposed to that. And, there's a very memorable stage of that, or self-reflection, where I have very few black friends because didn't grow up within the black community. But within the years, we ended up talking a lot about diversity and inclusion and what it means. And I remember a conversation where one of them told me, in most rooms, I'm the only black person. And when I step in, I have this sense because they're all looking at me, but they're not looking at me. And I was like, okay, yeah, I get it. But I never felt it. And then I went to Kenya.
And you're the only white guy in the room.
And I was the only white guy in the room.
Yeah.
And I remember very vividly walking into like a huge shopping mall, that's like super westernized, like proper, normal, regular. And there was a huge like open floor there. And I was walking, and basically like they're semi-quiet around you, but suddenly people looking and then stop looking. And like, oh shit, that's what he meant. And again, this is all part of that, but basically growing up and evolving into that and looking at that, realizing that I want to do more to make it more equitable. But to be honest, didn't focus much on the whole women aspect till Me Too movement, 2016, 2017, which was a very rude awakening for me because I knew most of these people. I spoke on panels with them. We had dinners, like fireside chats, and like, holy shit, these are like from misogynist assholes all the way to predators. And I was like, what the hell? Like, I thought we had the same values. What happened here? And I remember my wife and I had a conversation. She's like, why the hell are you surprised? This is like, you give money and power, like, to men, I'm not even talking about the color of the skin, to men. It happens in all other industries. But I told her, yeah, but this is
it shouldn't happen where I am.
This is not what we in
and
tech.
And the ecosystem is meant to be so inclusive. Yeah, exactly.
This is tech and VC. This is not. And that's when I realized that I was a keyboard activist at the time. And if 80% of the tech and VC industry is middle-aged white guys, if I want to see the change I believe should happen, I need to actually step up and do stuff. And it took me time because like we founded Alma in 2019, but what I started doing is basically offering free office hours to any female founder. And I think a lot of people I met started doing that. And part of my work was connecting them to investors because it's a very network aspect. So the more you can help, the more it's like the likelihood, it's a numbers game. Like meet more investors, you'll find the right one. But then I got exposed to the horrid story of what it means to be a female founder fundraising.
Yeah.
And I had like anything from really like not talking to her at all, like looking at the guy in the room, even if the guy was her personal assistant. Okay. And she had like, hey, like she answered the question and they were talking to the guy. And it's like, if it's a co-founder team of she's the CEO and he's the CTO, always talk to him and like all the way through. So how about we continue this conversation in my hotel room?
Jesus.
And not once, not twice. It happened a lot. And I was like, something's broken here. Like
this is not okay.
Yeah. But going back, like I can't change people. And if these are the people with money, let's go. And like if you know anything about ventures, it's about the people. It's like the likelihood of a middle-aged white guy, British, which most investors in the UK are, to connect to 28, 35 young woman with kids or without, black, brown, or white, is less likely than to a 22 white British man. But then let's change the other side of the equation. Let's go to all the female investors. And I was a VC at the time, so I emailed a lot of partners and VCs that I know and work with and co-invest and say, okay, so who are the female angels that you're investing with? And literally out of roughly 15 funds, almost everybody came back with the same 5 names. I was like, what do you mean 5 names? Like, and apparently, like, because it's a network thing, they're all talking to the same 5 female.
Always.
And 2 of them actually are great advocates. And I knew all the 5. 2 of them are great advocates of diversity and inclusion in tech, but they haven't written a check in a decade. And I know that because we talked. And then I was like, okay, so what do we do here? What's wrong? And I went to women I know that have the money, that are like come from finance or from huge consultancies. And like, listen, like, have you considered angel investing? And I basically did what in like our terms called customer development.
Yeah.
I went to about 25, 30 wealthy or like women with means that I would assume can invest and asked them about angel investing and what they do. And like, I'm going to fast forward a lot. I came out with 3 conclusions that are very generalized, but that's what like helping with my thinking about Alma. The first is women don't see enough deal flow. And it's not something malicious, but it's a network effect aspect where most of the founders and investors are men. And when you share as an angel a deck, you share it with your mates. Usually men have mates as other men, not women. So literally a network effect, which is like, hey, John, I'm investing. You want to take a look? So even if Jane, John's wife, is an angel investor,
she doesn't get a look at the.
She
deck.
doesn't.
Yeah.
And you know that a lot of it is just seeing enough to find something. It's not like if you see 50 decks a year, that's not enough. Most stuff are there are not interesting for you as an angel investor. So you need to see a lot more. And the good ones are rare. So you need to be in the right networks to get there. So, okay, so we need to break the access barrier to good and to see more. The second was more from like inexperienced angel perspective.
Don't understand what they should be looking for, what good looks like.
Even a simpler,
don't even know what.
Most women I talked to at that time, and again, this is another generalization, were wrongfully assuming that they need to be an expert in an industry in order to be an angel investor. And they were self-selecting out. They were like, I don't know anything. Like, anybody that actually has invested will tell you, well, you don't need to know everything about the industry. You need to understand the mechanics.
And also, you want to diversify anyway. So
exactly. It's not about one industry, because then you're like too risky. But the third was, and this is like a really like I can be butchered on Twitter on this generalization, but men versus women type of mentality. A lot of people say men are more risky. It's not. Women want to understand, again, my interpretation of it was women want to understand the rules of the game before they play.
Yeah.
So most of the questions they started in my customer development interviews, they started asking me were, okay, so
how do I know?
Not even that. How much money do I need to put aside? How big of do I need a portfolio? How much time does supporting a founder take? How do you build a thesis? Do I follow on? Do I not follow on? What is follow on?
And the problem with that is, because I've gone through this thought process myself like many times, is you will never have all the answers to all of those questions, which means you will never start. Because if you are someone, and I'm very much kind of fit into that characteristic of wanting to know the answers before I actually do stuff, you'll never take that first step, right? Yeah. Because it's like, I feel like I'm not prepared.
But you have your day job, you have all of this. Yeah. There's no place for you to go and do that. And if you want to do it all by yourself, it takes a lot of time. Yeah. And you don't have the network, and you don't see enough deals to make it worth. Okay, I missed something. It's exciting. I want to know more. And it's literally the appetite is by doing. And that's from my end. Like I knew Dipali and Ella for about 5 years before. We talked about it. They were actually organizing a meetup between female founders and angels to help facilitate that. And Christine joined as well. And we basically spent 3 to 4 months, and then almost 6 months, understanding what we want to build. And basically the community, and Alma is not a syndicate, it's a community.
Yeah.
You actually have to take a pledge. And what you do is pledge to actually have capital and deploy it in 3 female founders over the next 12 months after you join. And it's an annual pledge. So you have you're a member
rolling
for a year.
Every 12 months you gotta deploy.
Yeah. And size of check doesn't matter, because what matters is creating the cadence and the confidence as you as an individual to back the founder. And the more you do that, even if you're able to convince a founder to take a 5K ticket, perfect. Then that means they see you as value add. So even having that conversation, creating the confidence in deploying. And the second part of the pledge is to share your deal flow, knowledge, and expertise with the community and help the other Alma Angels become better. And the membership is reviewed on an annual basis. But what we do is bring that support, help, place to ask questions and get informed to help female founders.
Yeah.
It's breaking that barrier. And we started actually just with, because it was during COVID, only online. 6 months in, we started sharing deal flow. As of today, we don't have the numbers from 2023, but in 2.5 years, the Alma community has invested in 150 startups in 247 rounds, so including follow-ups, a total of about 6 million, and in about 6 female-led funds as well.
6 million across 150 startups, 247 rounds. That is impressive.
Yeah. Thank you.
Those are pretty good numbers. I mean, and I guess we've had a lot of people on this podcast, VCs who invest in female founders. So we've had Samira and Kasim from Pink Salt Ventures.
She's an Alma.
I'm sure she is. Rupa Popper was actually one of my first ever guests. I know she's an Alma. Janat Shah Rajan, she's an Alma.
It's really interesting because actually there's a really interesting aspect if you build communities, which I really like to build. There's a secondary third effect aspect that just by bringing people that believe in the mission together. So Pink Salt found each other
Yeah,
Ilma.
Saloni and
Samira.
Okay.
Found each other on Alma. Not saying this is my credit, it's there.
Sure.
But
that's where they were.
Yeah.
Yeah.
At Z Ventures, Nicole and Trin met at Alma. There's about, I think, 7 to 10 Almas that started as Almas operators that then we have a channel about VC jobs, ended up taking VC jobs. So a lot of that created a second nature effect where people who believe in our mission now are able to deploy more capital and have access and support. And that I think is even more amazing, not to say that deploying capital isn't.
Yeah.
But like there's a lot of value in if you bring people around the mission and it drives it works.
But it goes also back to what we said right at the top of this around MBAs and so on, right? Like what Alma has essentially done, and to your point, it's a community, right? Has created network and network effects amongst the individuals. And the more that community grows, the more opportunities there are, whether it's investing, whether it's finding a co-founder, whether it's then finding a job. And look, I mean, I think you and I have talked about it in the past. I think, the more that Alma does, I think the better it becomes. Deepali now is obviously also with Speed Invest and,
Ella raised Zinc, the venture number 2.
Exactly.
Kristin raised a seed round for a startup. So
yeah. So all of these things I think have self-perpetuating and positive cycles, right? That will continue to kind of build on. So, I mean, I guess the only thing that I can say is it's great. It's a great thing for you guys to have created. And hopefully people listening to the podcast who weren't aware of this will be able to sign up and say, okay, maybe I can actually join a community like this and make an impact.
And there's a lot of great syndicates that support the same mission. And we believe in Alma, we're not a syndicate, but we want everybody that cares about it and wants the access to deal flow to join, as long as they're able to deploy capital. So we actually have people from Hermesa, which is a syndicate. We have from Angel Academy, Ventures Together, which is a great syndicate with Rob and Tom and Rana. There's literally a lot of people that work in different corporations or care about that mission, all get involved, and a rising tide raises all boats.
Yeah.
So that balance is the more the merrier, as long as you're able to actually deploy.
Well, I think I love the fact that we ended that on a naval theme, which is where we started. Listen, David, it's been absolutely amazing having you on the podcast with me today. For our listeners, where's the best place for them to find you? Are you online? Are you on LinkedIn, Twitter? Where's the best place for them to
LinkedIn and Twitter.
Okay, amazing.
Best thing.
Okay, David, thank you again. It's been a real pleasure having you in the studio with me today.